So nice win yesterday on daily profit play. We decided to go the direction route, so letting price kind of go one way or the other, and it worked out to the downside where we needed price to get below 40. It came all the way down to, let's go to SPX. We needed price to get below 67.40, and it ended up going all the way down to 16. So plenty of direction. It stayed down there through most of the afternoon. The 620 credit that we collected, I closed out for 570. I had two winners on the day, 50 bucks, 50 bucks. So I took my 100 for the day. But that 620 trade expired for full credit at $1.20. I had a trade of this in my YouTube session in the afternoon and closed it for 20 cents. So grabbed 100 bucks out of that trade. But down here, when we were trading at 67.20, 67.25, that 620 was trading for 520, 525, 515. So getting most of the profit out of that trade well before the close. It tried to make its way back up into that 40 zone. We're coming into today's price action. Here is my daily profit indicator. We're still at an elevated VIX around 16.5. We are in negative gamma below 67.40. So you can see, either direction, price can possibly grab a, 67.60 high today or a 6,700 low today. Realistically, that is the range we need to watch. Okay, so this level, we had a bit of a fake out Thursday, 65, 65 or 65. I'm sorry, 67, 65 is our high from Thursday. We've got it back up to 60 on the upside or 6,700. That floor is really important. So today's trading, I don't know. I mean, it's a plus minus 27 for what I'm seeing with the market maker expected move. Does that get us up to, fresh all-time highs? Probably not. But I do think the vulnerability of breaking the floor at 67, if we're going to stay in negative gamma especially, then that floor at 67 does look a little bit attractive for price. I'm going to have a contrarian thought here, okay? So read some Senate reports and surveys last night, and a lot of traders right now are believing that 7,000 is a foregone conclusion. 7,000 is an easy target. 7,000, they're taking the over that the S&P is going to be at 7,000 by the end of the year. It's fine if we get there, but I think if we get there with no sideways or no pullback, then it just makes me want to short a little bit more. If you took that VIX trade with me, that's a November expiration. I still like that trade in case we have a bit of a short-term shakeout. But I like the trade even more. If I look at it this morning, I'm going to try to go out to like April of next year. So I'm going to look at the VIX. I also am going to look at a position on FXY to get long the Japanese yen. I already am, but it's pulling back so aggressively. I'm probably going to look at either a ratio spread or some type of synthetic play where I can get long the Japanese yen. And also I want to put a trade in on oil and CEF. So I've got some bonus trades that I wanted to throw out there. CEF has benefited from this big run. If we go year to date, let's go year to date. Try to find this candle here. So year to date on CEF, 58%. Okay. That's, to me, that's just as good as an SLV or GLD trade. GLD is obviously way more expensive. It's $365. Silver is in the 40s right now. CEF is a little bit cheaper than both. But it benefits from the appreciation of both gold and silver spot prices. So this to me is a pretty cost-effective way to have some skin in the game with some silver and gold without feeling like it's breaking the bank, and also getting long, on some pullbacks. So I think what I'm going to do is dollar cost average, probably 1,000, probably 1,000, probably 1,000 for my cash accounts, and then probably 2K in each spot for my margin accounts. I hate to say it, but I kind of want to just throw a position in now, and same thing here and same thing here. So if we have a violent pullback, great. That kind of shakes out some of the loose hands. Seasonality wise, usually gold and silver don't just break. What they do is they go sideways. So I could see us, putting in an allocation here, and price just goes sideways and sideways and sideways, and it kind of bores everyone to death. And maybe we have a more pronounced pullback with the broader market, or maybe it's just off to the races again. So what a crazy year, though. I mean, so far it's like we're not even done. But the market, like gold best performing asset, silver best performing asset, platinum's actually outperformed both of them. And nobody's paying attention to that one, but that's not exactly the easiest to trade. Uranium's been crazy. It's just like in the background, we've got commodities going crazy. We also have one thing that is a little bit of a red flag for me is market breadth. I think that's S5FI. Yep. So market breadth, this makes me a little bit nervous, okay? This is the number of S&P stocks, so 500 stocks, and how many of them are above the 50-day moving average? Only 49.3% of them. So this means one of two things. It means that we are sitting at all-time highs in the market without the market breadth supporting it. And even if you look at the Mag 7, the only Mag 7 stock that looks like it's supporting this is NVIDIA. That's it. So this to me is a red flag that we don't have market breadth supporting this. And again, it goes into like we're 111 bars now from the 50-day moving average. The longest in history is 128. Next week, if the government comes back online and we have to release data, we'll have inflation news and labor news. Good or bad, it's like it's news, it's noise, it's volatility. That floor at 67, if it breaks, we've got room to fall a couple hundred points at least. 7,000 is like the JPM end of the year collar trade, so I can see flows getting up to there. But I think it would be, maybe an aggressive buy and dip. I just hope we get a dip. Okay. No options on CEF. Correct. So it's going to be a dollar cost average position. So that one to me is like, I'll do options on GLD and SLV. We can also go PHYS, but it's PHYS is strictly on gold. So no options on them, but it's just dollar cost averaging into the spot price. Look, if you are long gold, long silver for the foreseeable future, it's just allocation. I've talked about putting in, 10, 15, 20% into gold and silver positions, essentially having like a stake. Look, my reality is I'm going to put in a bit of a pie chart that looks like this. Okay. Realistically, I've been doing it like here's my circle. Okay. Realistically, I'm probably going to do something like this. I will probably have about 40% of my portfolio. Okay. 40% is going to be cash. Okay. And when I say cash, I'm going to trade either SGov or BIL. That is it's about a 3 to 4% yield. So if it's unallocated, I can at least get that yield. Okay. That's realistically what I'm going to be holding. And that's not because I want to be on the sidelines. It's because I want to have dry powder for better opportunities. Okay. If we have a flush out with, AI, quantum computing, Mag 7, if there's some correction that, nobody's talking about right now, some black swan event that nobody's talking about, some, bond market break, some dollar, something that we haven't really foreseen as a reason the market is going to, shake off this euphoria essentially. Then we go into the allocation of, okay, if I have 60% remaining, of that 60%, I'm probably allocating, I don't know. I'd probably say, probably more to equities. This would probably be my equity stake. So, SPX, XSP, SPY, QQQ, DIA, IWM, and all options, equity options. Right. So I have some ownership of some things, maybe, but it's all going to be contained into whatever that amount is. And then the remainder is going to be a mix of gold, silver, Bitcoin. Right. So I don't like being unallocated, but whatever cash is on the sidelines is getting yield. So that's a bit of a kicker, and it will be utilized when I think there's a good opportunity. But gold, silver, Bitcoin running as like the appreciating hard assets, and then playing options with liquid instruments and indexes to, look, if the market, we went down, 20% peak to trough, we've rallied 40% off the April lows. Sideways is a direction, right? The market can totally go sideways. The market can have a 5 or 10% range where it doesn't just keep melting up to all-time highs. And maybe that's the new environment moving forward. Is like we have like a sticky, choppy, volatile 2026. Maybe we don't. I don't know. If the market just keeps up at this pace, it's like, okay, embrace it, I guess. I look back to COVID just as an example. We had a 30+% peak to trough. COVID from the bottom in 2020 all the way into the end of 2020 into 2021's melt up. The market didn't top out until NASDAQ topped out November 2021. S&P topped out January 2022. It was 120% rally before the market topped out. So from the bottom in like March, April of 2020 into the January 2022, that was a 120% rally. We're at a 40% rally off of the April lows this year. There's a long ways to go if we're going to stretch and have a 100+% rip from those April lows. So I'm not sitting here saying like this market has to fall. It's like sideways is fine. A pullback is fine. But I don't know what the destination is. The crazy part is if we get up to that 100% stretch, we're talking like S&P 9,500. We're talking S&P near 10,000 if we're going to have like a COVID type reflexive rally. Anyway, I don't know. It's something we're going to have to navigate, something we'll figure out. But this to me is what I'm pretty much doing moving forward is I'm going to have some cash, and it's cash that I want to allocate, but it's dry powder where I start to spot some opportunities. Okay. All right. So CEF, PHYS, those will be dollar cost averaging. I don't need options in those. I'd love to have options in them, but I'm not going to trade options simply because I just want to have a piece of that spot price. Okay. So if we're going to go higher over the next 1, 2, 3, 5 years in gold, I'll benefit from that as just having an allocation. And it's certainly a little bit cheaper to, buy something at, $30 or $35 than it is $365 for GLD. Granted, yes, you can trade options, but that's still an expensive option. If I held 100 shares of GLD, that's more cash than I think most people want to allocate to a single position. FXC has dropped alongside it. FXC, CAD. Yeah. Oh, well, I mean, the dollar's getting stronger. That's all there is to it. UUP is up. The dollar's up. So UUP, I mean, this is the dollar. This is another one that I wouldn't mind also fading. I think if this trade, let's go from a high to a low. So this is the, if I trade the dollar, you can trade the dollar this way. So we bottomed out, I think it's pretty obvious we either have like a halfway point of this range. So here's support, here's resistance, here's the halfway point. If UUP makes its way up into this area, I wouldn't mind getting short the dollar there. I wouldn't mind getting short the dollar there. I think that's very realistic. I think especially with this administration, I think we are in a legitimate debasement regime and the dollar is going to get weaker. I think the part that's going to scare people the most is if we have dollar weakness and stock weakness and bond weakness. That's a very anti-US play if that ends up happening. We did see a little bit of that during March and April this year. We see that very rarely, but like it's not good. When you have dollar weak and stock market weak and bonds weak, that's like, oh crap, like the US is doing nothing good. Right? There's nowhere to hide when that happens. So, yeah, CEF. It's a gold and silver allocation. Okay. And if you want to jump into like Morningstar or review it on Yahoo Finance, you can look and see what it is. But basically it's a like spot price beneficiary. So it's things that are priced. It's a combination of like physical gold, silver, and futures contracts. So it kind of it eliminates a lot of third party risk. It's super cheap, and I mean this year it's up 60% along with gold and silver. So it's a mix of both where it's like I want both in the portfolio, so I can trade them individually or I can trade that blend. So I did have positions PHYS, CEF, GLD, SLV. Along with gold and silver futures. That was my whole position for gold and silver this year that I just took all profit on, and I got back into silver. I'm now getting back into CEF. Okay. All right. So let's prep for the day. VIX box high and low. Gamma levels, we are negative gamma below 67.40. I will bring up my real-time levels here. So if we're going to open up, futures is pretty flat. We're going to open up right around, maybe just a tiny bit higher here. The call side yesterday never filled because we immediately went down. I'd like to, for no data and a Friday choppy markets, are we going to melt up into positive gamma? If so, it's like, I want to make sure my call sides are out of the way. Okay. Market maker move is around 27 points from what I'm seeing this morning. Let's go SPX. October 10th. Plus minus 26 on the day. If we go to Monday as well, 43 by Monday. I mean, I wouldn't mind getting like a broken wing butterfly in for Monday. You know, like a call side broken wing butterfly for Monday. Just because, like, kind of stay out of the way. But I'll probably just address it on Monday versus forcing a trade. Going into next week, I mean, next week could be interesting, right? If we come back online with the government, we have inflation data and non-farm payroll, all in a monthly expiration. I mean, all it's doing is, and I'm not saying that's bad news or good news. I'm just saying like that is a lot of volatility expected for next week if we get it. If we look at next week's expiration, that would be the 17th. The weekly expiration on the 17th that has a plus or minus 90 points. That's a pretty big shakeout from right now. So, yeah, we'll see. I think I'm gonna cool it on kind of the week or two out. I still think the market can break 67. A pullback to the 50-day moving average is over 3%. And I had mentioned this in my afternoon session yesterday. I mean, we have stalled pretty hard at these tops. I mean, if you look at this price action for the last 6 days, 1, 2, 3, 4, 5, 6, big old nothing burger, and I wouldn't put it past the market. Listen, 6 days of nothing could do one of two things. Surprise to the upside, and it's just one more thrust up, and it's like, gosh, you just can't call the top of the market. Yeah, you can't. You can't call the top in this market. Or the downside. Right? Now, I am obviously leaning more towards the probability of the downside. And in fact, if we did have a thrust higher, part of me wants to sell the crap out of that. Just because that is one of those capitulation type moves that once we top out, we have more room to fall. That's when all of a sudden your VIX drops hard, then the VIX spikes hard. That's how I'd position for it. I probably go long VIX, and I probably go broken wing butterfly galore, and I kind of stack them up over like a maybe 50 point higher, 100 point higher move, and see if we get paid over the next couple weeks. Okay, but that means that today, for example, all I'm looking at are current levels. So are we going to stay contained within this 6760 high and the 6700 low, plus minus something at 28? Well, we've seen a lot of intraday price action that's way beyond that, but the close, this high to low yesterday, was 48.5 points. So more than the expected move, but the plus or minus close on the day. So we opened up here, down about 35 points, pulled back and closed about 17. So the plus minus 2021 still was accomplished by market makers yesterday. So even a standard daily profit play yesterday did fine. I know some of you got filled at that dollar and it was down to like 67.10 was your put level. You had to ride it out a little bit further in the afternoon, but that still paid. So whether you went non-directional or directional yesterday, you still had a chance to get paid, which is obviously a good thing. So that's I think that's a true testament to a good strategy is whether the market is directional or non-directional, you can still get paid in the day. You're saying about half. It's about 40 to 45%, but it's not getting nothing. I mean, it gets about a 3 to 4% yield, and that's just a little bit of a buffer. But that is liquid. So if I want to allocate it, I can immediately jump in and allocate. That type of 40%. When we had the dip in August, I chewed into that, and I think I still had about 20 to 25% cash during the April pullback. But I was more allocated during the higher VIX and the scary time of the market. And obviously, I'm still riding those profits to this day. So, yeah, I mean, I think having some cash at the ready is always a good thing. We're sitting here at all-time highs with tons of frothiness. I think what scares me retail-wise is this came out yesterday, right? The bear camp is slowly and steadily retreating. We now have 4 weeks of AAII sentiment where 42% bearish has now retreated to 35.6. And the big jump was going from, we went from, if you don't recall this, the week before this jump to 41.7, it was like 28% bullish. We jumped from 28% to 41%. Now it's up to 46%. So the market's getting a little bit more bullish. We're not quite at 1-year bull highs, but this is one thing to note. We're at 46% right here. The 1-year bullish high is almost 50%. So if I'm looking for like that topping call, it's like everyone gets more bullish. We hit a 1-year high in bullishness. You look at November of 2024, we had a pretty big shakeout coming into December, right? We had like a 6 or 8% correction in December of 2024. So it just makes me a little cautious of like the bull market that won't pull back at all. It's like pausing for 0.5% is not a pullback. I'm talking about an actual pullback of 2, 3, 4%, maybe 3 to 5%. Maybe a scary one gets into the 10%. I still think the market buys the dip. It just shakes out the leverage. That's all it is. It just shakes out the leverage, right? There's leverage gold. There's leverage silver. There's leverage everything. There's leverage. Everything has leverage. And when it's rewarded, when the market just keeps going higher, 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 all that leverage just keeps getting baked into the system and it's rewarded. Well, at some point, that leverage has to come out. And that's usually why we see pullbacks. Okay. All right. So anyway, we're continuing to see the bulls climb in sentiment. We're continuing to see the bears retreat. And I just think this is something we need to be mindful of is, 1-year bullish highs around 50%. We've had a nothing burger for the last 6 days. Even looking at today's price action, I wouldn't imagine there's a ton of surprises. Okay. But I want to make sure that if we are going to get a trade today, that I'm up high enough and I'm out low enough if I'm going to go both sides of the trade. Okay. I would like to try to sell some bear call spreads just into the highs and see if we can just kind of survive the day for the highs. One thing that would be super annoying is like the market is, and we have to watch this. If this flips into positive gamma, if it flips to positive gamma and it just goes up again to try to poke these highs, I'm just curious what the market breadth looks like today. Like I showed you, every Mag 7 stock does not look bullish except for NVIDIA. If we go through the Mag 7, I'll go in alphabetical order here. Here's Apple. Okay, Apple overbought, running right into all-time highs, pulling back with yesterday's candle. Amazon, not even close to the all-time highs right now. Broadcom hit the all-time highs, pulled back, I think double digits or close to it. This pulled back, 12 to 13%. So a little bit of a shakeout, at the all-time highs. Google looked good, but has stalled and probably pulled back 5 or 6%. This is down about 6.5%. Meta, a decent pullback into double-digit territory. We pulled back about 13%. Meta's bouncing a little bit off these lows, which is pretty good support off the 144. Does it make a run? Maybe, but still well off the all-time highs. Microsoft, same thing. Pulled all the way back to the 50-day. I don't know. This looks vulnerable to me. That was like an exhaustion gap. Netflix looks fine, but it's a $1,200 stock. I don't want to buy it. This one looks healthy, right? Rip up to all-time highs, pull back, bought up the 50-day, pulled back or pushed up to all-time highs again. So, if NVIDIA keeps charging higher, great. But if it pulls back, this is such a big factor in Mag 7 right now because this single-handedly at $4.7 trillion market cap is really important. And I know the space is getting a lot of love with semiconductors, but if NVIDIA has a bad day, the market's not going to love it. So NVIDIA has to keep doing well. Tesla, made a heck of a march to the upside on Musk buying shares, and it kind of front-loaded all the delivery news that was coming out. The reason why the markets were getting those great deliveries is because everyone's jumping in and buying their EVs to get their tax credits, right? That tax credit, if that goes away at the end of the year, well, then it's not really the incentive to buy a Tesla or an electric car. Anyway, but on the, kind of the run up here has had a volatile shakeout. We're also not at all-time highs. I think Tesla is still not just a car play. I think Tesla is still an energy play. It's still an AI play. It's a robotics play. It's profit margin play. But I know it's expensive. It always is. The price to earnings is always expensive. Price to sales is expensive. But I think Tesla is just more than an automaker. And then Berkshire, bottomed out here in August. I wish I would have bought some Berkshire back here in August, or at least in a ratio spread, but I didn't. Anyway, see what I'm saying? Like the only chart that looks really bullish is NVIDIA. So look at mags. It looks just like the S&P. A lot of sideways, right? Market breadth under 50%. So it's just vulnerable. That's all. And if the market's going to have a bit of a shakeout, what a perfect kind of time to do it. It may not be today. Obviously, that time is ridiculous, and I'd never try to call the exact timing of it like that. But within reason, I think we're 111 bars overstretched. I think this market doing nothing for 6 days, market breadth below 50, and Mag 7 look a little bit rocky at the tops. if we break 67, I'm just telling you, don't be surprised if we break 6,700, if there's room to fall. That's all I'm saying. So for us in daily profit play, if we clear 67 and it's not this immediate, we clear 67 and 0DT gets us right back to these highs. If we clear 67, we're probably having some gaps to the downside. And we probably hit the 21 and the 50-day moving average. I still think the market buys this dip or buys this dip. Double ups and waterfall income and daily profit play, we will be positioning for that type of pullback. Okay. So I'm happy to buy the dip. I want a dip. But we've gone nowhere for 6 days. So today we're opening up here in just a minute. If I can sell high enough and wide enough, I will possibly take the trades. My VIX box is all the way up here towards 6,800. Up here to 6,775. So let's see. We're opening up real-time gamma. We've gapped up a little bit. We're pushing kind of right out of the gates. Futures up about 0.12. There's your gap up. So can I get to 75, 80? 100% ATR on the day is 80. All right, I'm going to try to go 80, 85 today. So bear call spread. I'm going to try to go 6,800. 68. It's a freaking 2 delta. Gosh. 65. All right. So a standard daily profit play would be a 75 by 80. 75 by 80. And the 10 and 05. That's good for $1. Let me see if I can get $1 on this thing. I'll take the trade. It's good mechanics. Just following the strategy. Let's try to get $1. So pending at $1. Mid price is $1.05. I'm just going to let it marinate, and then I'm going to put in some bear call spreads. So that is up to 75.80. Come on, man. That means we're getting right back into positive gamma then, right? Yep. Okay. So this high is just got filled for $1. So trade is in. I'll get that posted. So I'm in with the 75 by 80 on the call side, 10 by 5 on the put side. That's coming in hot in the alerts. New trade, SPX, 10-10 expiration. Okay, trades in. Okay, let me get my levels for today. So I'm going 75 and 80. So my line in the sand is here. 75 and 10. Yep. So for the morning, if price just hangs out here, it can go up a little bit. It can go back down as long as you don't have an aggressive turn to the south and get below 67. So we just want to see time be our friend here for the next maybe 30 to 60 minutes and just kind of stay in here. On the upside, I'm going to go to my daily profit indicator. Can I sell? I wouldn't mind stacking up some orders in here. I'm going to stack up like the 85, 90. I'll stack up some bear call spreads. But otherwise, we'll just have the daily profit play try to pull out a winner. And it's not bad. So here, So in for $1. I'm going to close this thing down for 70 cents for the winner. And if it looks, really encouraging as far as price action today, I might lower that debit to 50 cents and just try to grab, $50 out of that trade. Let me get my daily ATR levels for my tracker. We're looking at, today is the 1010, 50% ATR up is 67.55, 100% ATR up, 67.75. And the 150, 67.95. %50 ATR down, 67.15. $66.94. $66.74. Okay. Small gap up. Gamma pivot at 6740, which I think we're just above that right now. Yep. So we're positive gamma above 6740. Market is experiencing a 6760 range high and 6700 range low. Key levels to watch. And I'll update that as the day unfolds. Okay. So I'm looking to see if price will stay below 75 and 80 today. Plus minus in the day was about 26, 27 points. From the close yesterday, that puts us up to about the highs. From the open today, if we go up 27 points, that's still around the 70 to 71 handle. So we should be safe, per market makers, we should be safe in that trade. I'm open today is not the day they want to blow the freaking tops off. So, on that note though, it's like I will look to see if I can sell up here. I think I'm going to go like 85. So I've got the 75 and 80 in right now. I'll go 85.90 for $1. 90 and 68 for $1. And 05 and 10 for $1. That would be an aggressive move if we get it. Very aggressive, in fact. So I'll watch and see if any of those fill. But this is the power of that annoying zombie-like pestering positive gamma. Just 0 DT is like, buy everything. Well, does it run into resistance? Does the market want to try to accomplish all-time highs today? Maybe it does. Is it enough to hang in there? It's like, well, here's what I'm going to do. I need to go out and buy a VIX. I need to have some type of hedge on here. I'm hoping that we don't exceed everything from a market maker standpoint. VIX at 16 and change. VIX is retreating a little bit, but it's like, okay, so does that mean we're going to have like a 1% move up at these highs? Maybe. I'm hoping that we don't. So this one, I'm going to shift this. I mean, the 100% ATR is 80. Even my real-time gamma, it's like I don't see anything much above 85. So I'm going to shift 85 and 90. Yeah, I'll leave these pending. Okay, I'm going to go out to the VIX and try to get another trade in. I'm looking at the VIX out to, I did one to November. I'm going to go out to April. I'm going to pay a little bit more for it. Um, let me see if I just what can I do here? If I buy a call, sell a put, so I have a $700 risk. Let's see, is that worth it? I mean, it is for unlimited upside. Let me build this out. So I'll go build and synthetic long, VIX. This one is out to April 15th. If I, this is a 1616. So 16, 16, and then add another buy put at 15. There. So this is what the trade would look like. So if we see a spike up in the VIX, okay, let's say the VIX gets into 30, or I mean 30 is a pretty good profit. I take a $600 to $700 risk, and that's 100% gain and more. We go 35, it's like 200% gain. We go 40 VIX. Now we're talking some pretty ridiculous numbers. So I think it's a cushion, it's a risk, but I don't think it's a bad play. So I'm gonna look at taking this trade. This is out to April 15th. If I wanted to maybe sell the 17, it's about the same debit either way. 688 versus 699. I'm saving like $10. Yeah. All right. I'll go synthetic here. So it's going to cost me $700, but that's the max risk, which is the nice side is I can't really get burned on this other than $700, which means we just don't go in the VIX for the next 186 days. So I like that trade. Let's see what we get. If I go, can I get filled here for a $6 debit? Oh. Okay. Let's see what else we can do here. If I were to buy 2 calls at the 90 delta and sell 1 at the 50 delta. Maybe I'll set this up as a zebra trade. That's more expensive. So it's another way to kind of look at it synthetically of being long. You get unlimited profit, but it's a more expensive debit. Let me sell. I can make this debit. See if this caps my. Yeah, it's still more expensive. Let me build that out. So I like the synthetic one that I'm looking at. It's just going to be probably more expensive. Let's do this here. If I did a buy 2, so buy 2 at 15, sell 1 at 16. Hmm. I mean, if the VIX came back to like 14, it's like there's risk. That somehow doesn't set up right though. I buy 2 at 15, sell 1 at 16. That should cap me with this risk. Anyway, all right, I'm going to try to go synthetic again. So April 15, let's go buy the 17, sell the 17, buy the 16. So I'll do just a little bit in the money here at the 17 VIX. So I'll buy the 17 call, sell the 17 put, and buy the 16 put. So it's going to be synthetic. My risk is 628. So that is a buy at 17, sell at 17, and buy a put at 16. There. So it should look like this. Okay. So there's, unlimited profit if we have a crazy VIX, but even realistically, a spike up into the 30s or 40s, pays pretty well. There's a $1,200 to $2,200 profit. If we get a big, ridiculous move into the 50s and 60s again, like some big volatility event, you never know. But for a $600 risk, it could pay pretty well. $600 to turn into maybe $1,200, maybe $2,000. So a little cushion if the market gets a little crazy. All right, debit at 527, 528. Let's see if I can get filled for 530. I think my max risk here is going to be about $650, maybe $700. That's my max risk. 530 is not filling. Let's try. I'll just kind of penny this thing up until it fills. I'll find a price and I'll put this in as a bonus trade if you're interested. So 535 debit would be 639 max risk. 540 debit would be 644 max risk. Filled at 538. Okay, I've got a trade that got filled. So this is now going in across the board. Okay, 537. Okay, I'm putting this in all my accounts. Let's go here. Okay, I'll type it in the chat in just a moment. 1904. All right, almost done. Okay, so filled. Got it. All right. Bonus trade, VIX, April 15 expiration. Buy the 17 call, sell the 17 put, and buy the 16 put. It was filled at 540 debit. So 540 debit is about a $640 max risk. $640 max risk. Unlimited profit. Looking for VIX to spike to let's say 30 to 40 area. I think that's realistic. If we spike up to, 50, 60, which is what we did during Liberation Day, then it pays really well. So, I'm not, hoping for like some crazy outlier type event, but obviously it's nice to get, 3, 4, 500% gain if that's what it's going to be. So we'll see. Okay, bonus trade there. And then I'm going to also get back into CEF. Okay, let's see where we're at for the day. I'll set this debit. I'm just going to keep it mechanical at 30% profit. So in for $1 and try to get out for 70 cents. See if we can grab a winner. Bear call spreads are still in, just not tested. We came up and hit that 50% ATR. So just right at the all-time highs, like just kind of stalling there again. Okay, let's see what's happening on CEF. I'm going to, what's like $1,000 here. 1,000 divided by 38.23. All right, let me get a list of shares here. I'm going to put in some shares. So $1,000. So $1,000 allocation would be 26 shares at 38.20. And then I will go down to, I'll go $35. So another $1,000 there. 35. 28. So we'll go from 38 to 35 to, let's go 32. Okay, if we came down below this, it'd be where else? I mean, let me just cut this move in half. I know this could be like ridiculous and unrealistic, but if I did it's nuts what this stock has done. Let's just go from this entire stretch. Crazy. If we take this entire stretch and we pull back here, I mean, that's 20, I'll go 27. It's another $1,000 at 27, 37 shares. Okay, so here's what I'm going to do. I'm going to put in, I'm going to go a $1,000 allocation at 38.20, our current price. $1,000 allocation. I'm going to do this for my cash accounts at $35. 1,000 allocation at $32. 1,000 allocation at $27. Okay, that's for my cash accounts. And then for margin, I'll go 2K. 2K allocation. So what that works out share-wise is I'll put this in relative to shares. So right now it is 26 shares and 28 shares. 31 shares and 37 shares. Okay. So I'm going to get this in and started and posted. So I'm going to do $1,000 for cash, $2,000 for margin, and it's going to basically space me in from current price down to about the halfway point of this run. And that's also previous all-time highs. So I'm going to space in where I'm dollar cost averaging into here. And that from a percentage pullback, I mean, that allows this thing to be dropping up to, 30%. Obviously, you can pull back more, but I think a 30% dip would be a really attractive buy, if you ask me. Yes, correct. 415 is it's the nearest expiration for April, right? It'd be 2026. So I'm going into, it's that weakness window from like February, March, April. It gives us time in the trade. So, and the reason I'm going out that far is because I have a trade into November. If we don't have a short-term spike in the VIX in the next couple of weeks, then that November expiration is not looking great. So I'm just going to go out and, April is like, look, if we don't have a weakness window by April of 2026, then something is freaking broken. Okay. All right. This is what I'm doing on CEF. So I'll get these in. I'm going to put this across the board. This will take me a while. I'll do this on my own time. I'm just going to go in for my allocation here and start getting prices in. But I like CEF to add back to it. I took a bunch of profit on it, so math works out nice. Current price for the day. Poked the first gamma resistance. We're still in positive gamma above 67.40. If price is just going to stay here for the day, a little bit up, a little bit down, then great. This is perfect for daily profit play. Okay. I mean, we're at the 75 and 80, correct? Yeah. So as long as we're not threatening 75 or 80, we should be seeing some profit on the trade right now. So we'll need some time. Probably by 10, 30, 11 o'clock, we'll see what this is trading for. I've got the take profit set at 70. I'll stick to that and just take a winner for Friday. I don't need to get greedy on Fridays. Okay. Any questions? Pending trades for what, Edward? Pending trades that I did are CEF. The pending trades that I'm doing for today's bear call spreads are up here. 85 by 90, 95 by 6,800, 6,805 by 10. I don't know if any of those are going to fill, but I'm just layering in some levels based on my daily profit indicator at the higher ATR levels. So the 100% ATR is at 80. So I'm going a little higher than that. I'm doing 85. 85 by 90, 95 by 6,800. That gets me up to the VIX box high. I will say this, if somehow price is coming up into this 100% ATR, I'm going to try to do maybe a 2 to 3 contract trade up here above the VIX box. Okay. So I'm going to try to defend these levels. But again, within reason, not crazy amounts of risk. It's like I get that there's still risk every single day. I do want to see if I went out to, I mean, next Friday is going to be an interesting week. I don't know. I don't know if the government's coming back online. I don't know if the market's going to release, if we're going to actually see inflation data or non-farm. I mean, as far as I know, it's still going to get kicked out. So until the government comes back online, I suppose. Oh, nice run there. 23% running on Coinbase. That's a pinch point trade. Not too shabby. Up 23%. We got the take profit set at 685. We're up 645. Let's go Coinbase. Okay, some good looking pinches out there. Waterfall, pending orders. SPX for Waterfall up 36%, up 18%, up 35%, up 33%, up 17%. This one should be flat, but still should be positive. Then we go into SPY. This one's up 86%. It's got to be close. I'm looking at a 5-cent debit is trading for 8, 7-cent debit trading for 12. These are looking good to close out. This one is up $80. So, I mean, we've got, I don't know, $200, $300, $400 of profit on Waterfall right now. Time is our friend. Prices are high probability. So setting the take profit here. We'll talk about this today. I've got a masterclass at 1 p.m. for Waterfall Income. We're doing a strategy 2 masterclass today. Okay. And then on the Qs, we got a trade on the Qs. This one's up close. Again, we put a take profit into this one. I've got a 6 cent debit trading for 8 cents. So I need just probably the weekend time decay. 5 cents trading for 12 cents, up 84%. This one's up 76%. All those are good. And then we also have a trade on IWM. This one's up 23%. I'm going after $100 on this one, I believe. Do I have this one pending? Yep. So 281, looking to get it filled at 381. So, yep, that's still pending as usual. And then Dow, we got a pinch trade and we got a waterfall trade. Waterfall trade's up about 30%. 125, we've got the take profit set. We did a 2 wide, and we're getting close to our take profit. 445. So put this in at 50 bucks. Yeah. So I'm looking at a profit here of about 50 cents. So max is $2. Yeah, I'm close. This is going to be getting close to getting filled for profit. That'll be like a 35 to 40% winner. So yeah, waterfall's looking good on a lot of trades, as expected. Okay. Are you looking to close the standard at 70? Yes. I'm in for $1. I'm looking to close out at 70 cents. So like I said, if I want to get a little greedy on the day, then I can put a 50-cent debit in, make sure price is relatively contained. I just don't want to take this trade into the afternoon. If price is going to get a little silly and go all the way up to highs again, I don't want to sit here and, beg for it to come back. It's like if we get our 30 to 40 cents profit on the trade, just take it. Okay. But hopefully it's just a calm Friday. The market can, ease into the day, ease into the weekend. We'll get some more time to can our waterfall trades. Hopefully see some of those profits get hit for 4 more winners next week. And we'll see what the day ends up doing. But gamma pivot around 67.40 today. So out of the gates, I'm curious on that plus minus. So we had price open, jumped up about 17 points. Plus or minus was 26.27 on the day. Just keep that in mind. So if we started here and went up 27 for the day, that pushes us up into around 71 or 72. So that's enough to get up into highs, but our trade is at 75 and 80. So it should be fine. Same thing, the downside, we obviously don't want to see price get aggressively bearish all of a sudden. So we just want to see price do this. This is fine. We just need some more of it, right? Some more of this is good for the day. Okay, Greg says I'm at 110, 120 and 2 accounts. Okay, good. Very nice. All right, so while we're hanging out there, let's go. All right, I've got another little waterfall session to read through this morning. I will get my CEF trades posted for today. I'm going to put those in officially for my Project Options Edge. So making that like an alert service, I'm going Project Options Edge for CEF, the dollar cost average in. For my Crash Insurance Masterclass, Dion, I'm going to post that trade for Crash Insurance Masterclass, the VIX trade that I did. So I'll put that in right now. This is Crash Insurance Masterclass, new trade. If we go VIX, April 15, 26 expiration. I am buying the 17 call, selling the 17 call. Oh, sorry, selling the 17 put, and then buying the 16 put. Got filled for $5.40 debit. So it's a 640 max risk. Unlimited profit potential. Looking for a VIX spike to 30 to 40. Or I'd say close to 200 to 300% gains. That trades in for Crash Insurance. Okay. How's everyone's week overall? We'll grab some bucks this week, take some profit. I mean, it was a pretty big week. I made the decision to close out some of my gold and silver, which was about 150K. So that's not a bad, it's not a bad racket. I've been in those positions for a bit. And then now it's like, well, I want to still have some exposure. How do I kind of dip my toe in the water to do it? So that's what I'm doing today. Put in a trade on SLV, doing this trade here on CEF. I'll watch prices. Obviously, I'll get back into SLV dollar cost averaging. I've got dollar cost averaging levels on both GLD and SLV. I've got options on GLD and SLV, but I'm just going to look to add some additional dollar cost averaging. Okay, there you go. Paul, that's great, man. Best trading week so far, up 13K. Freaking sweet, man. It's awesome. Very good trading there. Oil is another one I want to take a look at. Let me see how long out I can go on oil. This could be a gutsy play, but I wonder if I don't think I can go out far enough on CL for futures. How far out can I go on oil futures? I can go out to September 2026. I'm going to go out farther. How far can I go on USO? Okay. So I can go quite a ways out on USO. And income trade, if we're above 60, I could probably do something along those lines. Like a 60 by 55 ratio spread. I mean, that's really good, actually. All right. This isn't a bad income trade. I'm going to do this for Project Options Edge. I'm going to do a 60 by 55 if I want to be safer. I mean, that's a pretty simple income trade. 50 by 45. I know it's out a ways. It's out a ways. Maybe that's out too far. Yeah, that might be out a little far. Let's see. If I went out to maybe the end of maybe 2027, this might be a little bit more realistic. So if I do a 60 by 55, it's okay, I guess. All right. 65 by 60. If I was to take any assignment, I'd pull in hopefully over $4 of credit. That's the income side. If I took any shares, it'd be at 60 bucks. 60, I mean, that's been tested. Ideally, I kind of like the 55 or 50. Maybe I should just go out farther. I'm going to go out farther. I just had this thought of like, what if oil and energy and natural gas and all these things that nobody's been talking about or nobody loves becomes what we just saw this year on gold and silver. Now the bad side about oil going this high would be it is crazy. Excuse me, it's crazy inflationary if we see oil going to just obscene bullish levels. But if we want all the energy in the world to build out these data centers and be, paired or shifting into AI, I think I'm going to take the trade. So I'll go 55 by 50. Not bad. 60 by 55, better. But if I want to increase the probability of profit, 55 by 50, maybe we can pull in close to $4 on this trade. So I'll start out with an income trade. If oil comes down, I will probably establish a different position like a synthetic play, but this is a pretty good income trade for ratio spread. So I'm going to take this trade. Let's see if we get filled here for $4. I'm going to put this in for my margin accounts and Project Options Edge. So $4 not filling. Let's try $3.90. I will accept $3.50, which is quite a bit below the mid price. But let's find out. $3.80 is the mid. Not filling. 375 maybe. Not filling. As long as I get over 350. If it's not filled, then I won't take the trade. 370 not filling. 365. Come on. 360. All right, just got to fill it with 360. So Project Options Edge is going to get this trade. Project Options Edge. New trade. USO. Buy the 55 put and sell the 50 put. 3.60 credit. Is less than 50 by expiration, which would be pretty difficult. Right now, the mechanics, there is but an 83% chance of profit on this trade. And we're talking potential assignment risk of around 15%. Okay. And if you don't love that trade, then don't take it. But I would own shares at, I mean, the shares would be owned around like low 40s. So if I'm assigned at 50 minus the $5 ratio spread profit trap, and then the 360 credit, I'd own shares of USO at 41.40. 41.40 means that oil can drop another 40% from here. I think we need all the energy we can get. So this big AI demand, I think this keeps this pushing. Yeah, I mean it's I think a good probability trade. So I'm taking it. All right, see if we can get filled across the board here. I'll let it just hang out at 360. There's plenty of time in the trade, so 360. 360. Getting filled. All right, this is good. So it's getting filled on my margin accounts. I'm taking one for the IRA accounts that have a decent amount of capital. I'll throw it in there as well. Let's go 16. Okay. All right. And then throwing these into the other margin accounts. Okay. Trade is in. All those accounts. All right. So we're going USO 121. Buy the 55 put. Sell the 50 put. 3.60 credit. So if assigned break even would be 41.40. Daily profit play closed 36 and 42%. Very good, Greg. Venkat, that's correct. Yep. David says Iron Condor's gone to zero. That's not true. I don't know how you can get it to zero. It's zero at the end of the day. So what is the profit right now on it? I'm up about 21% on my 5 wide. So it's close. It's trading for about 75 cents debit, 78 cents debit. Yeah, I just need a little bit more time. It'll be fine. Looks good for that 30% winner. Okay, I'm going to give us some more time. All right, good stuff. So some bonus trades, USO bonus trades, CEF for bonus trades, VIX, Crash Insurance Masterclass got that trade. Project Options Edge has the trade on USO, CEF, dollar cost averaging in. Good week on daily profit play. Good week on double ups. Great. I mean, yesterday's double up trade was great. I took both sides. I went call fly and put fly. I didn't take a huge profit. It was still enough to make money on the day, but man, that 67.20 was so good. It offered up to $4 yesterday on an 85-cent debit. So that's a big fat winner. If you held on to it a little bit longer. So $4 minus 85 cents. Man, that's a 370% winner. Return on risk. Like double ups, such a good low risk, high reward strategy. Love those trades. CEF details. Yep, they're right here. Just take a screenshot of this. This is where I'm buying. So I'm putting in prices like a current price. So it's 30 to 27. I'll just buy current price for $1,000. I'm going 1,001. This is me. So if you want to risk less, then do the math. If you want to put in, 500, 500, 500, 500, or 100, 100, do the math. But I'm going to buy these shares for my cash accounts. This will be a 4K allocation. I'm going to do 8K allocation for CEF on my margin accounts. And I'm going to level in essentially from current price all the way down to about a 50% pullback and just let it do its thing. Like this, there's no options on this one. So even though I would be, owning over 100 shares, it doesn't matter. I'm not going to cover it. This is just exposure. Okay. Greg says got out 285. Oh, very nice, man. And again, that's great. Like an 85-cent debit, get out for 285. That's an awesome trade. Okay, so CEF, I will do this. Copy this, post it in the chat. That's what I'm doing on CEF. That is for CEF. Gold, silver. Okay. All right. I have a master class today, 1 p.m. Eastern time, waterfall income. We are going to dive into waterfall income strategy 2 today. I just reviewed those trades. I mean, we have like 10 or 11 positions that are all looking for profit. I've got 4 that I've got pending orders on to close right now that should be filled hopefully in the next week or so. We're averaging a 94% win rate with an average return of about 20%. It's a great trade. It's one of my favorite strategies. It's, to me, one of the easiest ways to get people on board with learning how to trade some, I'd say, straightforward options. I'm not going to say, I don't think when I first learned options, I would say like options are really simple. Nothing simple about options, right? You go from playing tic-tac-toe in the market to playing chess. So going from a buying a call to a buying a put to then creating like a basic spread trade. But what you're thinking about when you trade options is you're thinking 1 or 2 steps ahead of this trade. So this trade is binary in results. So if I get a winner, price has to be here. If I have a loser, price is here. It's defined risk. We're winning 94% of our trades with real trades. I would sign up for that win rate on anything. And those losses, we did the math on this yesterday, those losses only take about 4 trades to make up. So if we do take a loss, 4 trades with me. We trade this thing every Monday. So 4 weeks, 4 weeks in, you're back in black and you're on top, and you're still stacking orders along the way. So it's just such a reliable strategy. This also has been, this strategy alone helped me survive 10 months of bear markets in 2022, helped me survive COVID in 2020, 2018 Volmageddon event, 2019 pullbacks, 2016 Brexit when the market was all crazy in the currency markets.